Hi, hoping that you have a great time. This is Professor Ramakrishna. I'm Professor of Finance at one of the AACSB accredited business schools in India. This is my YouTube channel, Archiversity, and thank you for choosing my YouTube channel to enhance your knowledge in financial accounting. In this lecture, I'm going to explain the concept of accounting equation. The accounting revolves around five different items. One is assets, second is the liabilities, third is the owner's equity, fourth is the revenue, and fifth is the expenditure or expenses. So if you get familiar with these five key words or key terms of accounting, and if you are able to understand the relationship between these five words, then accounting is fun for you. So you can enjoy accounting. So now I take you my OneNote where I have one or two slides or images using which I'll explain you the concept of accounting equation in detail. Here is our basic accounting equation. So in simple terms, your accounting equation: assets equals to liabilities plus owner's equity, or in simple terms, equity. So your assets equals to liabilities plus equity. So here now when you're talking about assets are the economic resources that the business own. In simple terms, assets are what the business own. On the other hand, liabilities are the debts of the business, in the sense what the business owe. And the next one is the owner's equity or equity holders claims on the assets. So this is your equity. Now we go with this in simple detail. Let us say, as we are saying, that assets are economic resources owned by the business. So these assets may be of anything like your property, plant, machinery, then copyrights, buildings, etc., etc. All these resources which the business uses to generate revenue. Okay. Now to procure these assets, let us say these are the assets, and let us say these assets are worth rupees 100 crore. So where from this 100 crore is to be? So company has two options to mobilize this 100 crore. One in the form of equity, that is a owner's equity or equity capital, and second one is in the form of liabilities. So these liabilities may be let us say in the form of a debt. I'm giving a basic thing. So let us say owners contribute 60 crore and they borrow loan from a bank of a worth of rupees 40 crore. So 60 plus 40, this comes to your 100 crores. So why is that? In case of equity, why is that we are having a claims is, so the owners have a claim on this property, in the sense, after, let us say, in unfortunate scenario, the company is 100 crore and it wants to sell it to other or liquidate it, then from this 100 crore it will pay 40 crore to the debt holders, and remaining amount is the 60 crore is left out with the company. So this 60 crore belongs to the equity holders. And any revenue generated from this is going to be or it will belong to the equity holders. In the process of this business, we also have other types of assets like current assets, non-current assets, then fixed tangible assets, fixed assets, right? And similarly in the liabilities we have non-current liabilities, current liabilities. That is an extended one. But the core idea is your assets equals to liabilities plus owner's equity. Based on this equation, that is assets, this equals to liabilities plus owner's equity or equity, we can rewrite these equations in any form. Let us say if you want to know how much the amount the equity holders will have in this company. So equity equals to, if you get assets minus liabilities, then you have equity. Or we can say if you want to know that what is the liability that the company have, then your assets minus equity will give you the liability. So just we take a simple example. Suppose a company has a total assets of 150 crore, and in this owner's contribution, that is the equity, is 80 crore. So then what is your liability? So if you have to calculate the liability, your liability is total assets, that is 150 crore. We use this equation. So 150 minus 80, so this gives you a 70, or 70 is the liability. Or in another example, suppose the company has 200 crore in assets and then 120 crore in liability, in the form of a liability. Then what is our equity? So our equity is total assets. Here we use this equation. Total assets, that is a 200 minus our liability portion 120. This gives you 80. So 80 is your equity. So this way, with the help of accounting equation, by knowing any two variables, we will be easily identify the third variable. Or on the other side, so suppose an individual group of individuals started a company with 10 crores of their investment and then borrowed 5 crore from the bank. So this is their equity and this is the liability. Then your assets is equals to 10 plus 5. So this equals to 15 crore is the total assets. So by having this accounting equation, we can easily make out what is assets. With the help of any two variables, we can easily calculate the third variable. Now next is that when a business is doing its operations or running its operations, now what happens is, in the process of running its operations, the company generates certain revenue, and this revenue belongs, or the revenue need to be adjusted with the expenditure, and after that the expenditure, after deducting the expenditure, whatever the amount left out, that will belongs to the equity holders. Why? Because equity holders provides funds to the business, all right, and in anticipation of certain return. So what firm is doing, or the company is doing, company is using these funds to procure economic resources, and using these economic resources, it generates certain revenue, and in generating a revenue, it also spends some expenses. Then it will earn a net income after paying taxes, depreciation, everything, that net income. So this net income belongs to the owners. So because the people who provided a funds, so this amount belongs to the owners. So this will go to the equity. This is explained in our extended accounting equation. So our basic accounting equation is assets equals to liabilities plus equity. Now in the process, what is that we are doing is, we are generating revenues, and these revenues, you have a revenues here. From revenues, we deduct our expenses, less expenses. Then what is it? Once you less expenses, you will get a net income. Now from that net income, you have two options. One is, as a business entity, you can retain this income, or you can distribute this to the shareholders in the form of a dividend. So let us say your net income is 50 crore and a company earned 50 crore as a net income. From this net income, you paid 10 crore as a dividend to the shareholders, because this whole 50 crore belongs to the shareholders only. It is a common shareholders or shareholders. So belongs to 50 crores to the shareholders, but from this 50 crore, you give 10 crore to the shareholders in the form of a dividend. Then how much amount is left out? 50 minus 10 is paid as a dividend. So you are left out with a 40 crore. So this 40 crore we will retain. This we call as a retained earnings. And this retained earnings will add to the common stock. That means what will happen at the end is, the common shareholders investment will increase by 40 crore. Let us say earlier they have 100 crore investment. Now this 40 crore is added. Now equity holders will become a 140 crore. Now you may be wondering, if on your accounting side, if shareholders equity increases from 100 to 140 crore, to balance this, our assets should also increase by the same amount. Now how is that going to happen is, this 40 crore what we have, maybe we have this in the form of a cash, or in the form of a bank deposit or in the form of a short-term investment, because this money is there in our business. So automatically this will be somewhere in assets. So finally your assets will equals to liabilities plus owner's equity plus retained earnings. That means whatever the money earned, it will be going to be with the company only. Let us say example. Suppose a company initially owners contributed 10 crore and borrowed a loan, that is a liability of a 5 crore, and so this equals to your assets, that is 15 crore. You can write equation anyway. So 10 plus 5 is a 15. During the financial year, the company earned 1 crore rupees. So 1 crore as a net income of rupees 1 crore, and nothing has been paid to the equity holders in the form of a dividend. So this 1 crore is retained. Now what will happen to the owner's equity? Owner's equity now becomes a 11 crore, and your liability, assuming that liability is not paid, so this will be the same 5. Then your total asset should be 16 crore. So 15 crores is the beginning assets plus increase in assets in the form of a cash or cash equivalents or any other asset also. So that will be 16 crore. So this is how, in the sense, extended equation it helps. Now where from we are getting this retained earnings is the revenue generated minus expenses incurred, and if there is any dividends paid, dividends balance amount is the retained earnings, which belongs to the common shareholders, because of which your shareholders equity will increase. In any way, this accounting equation going to be the equal, that is assets equals to liabilities plus shareholders equity. So this is basic accounting equation and expanded accounting equation. So the double entry of a bookkeeping works on this concept of a accounting equation. Now that is the reason why we say that when your financial accounts or your balance sheets, so it has to get tallied, because every rupee that you received should have an account. So where from you are getting a money and where you are spending and how much balance is there. So this concept is clearly explained or clearly understood with the help of a basic accounting equation and expanded accounting equation. Thank you for watching this lecture. So in future, when we record the transactions, we keep these equations in mind, that is a basic accounting equation and extended or expanded accounting equation in mind. Accordingly, we prepare our financial accounts. Thank you once again. Keep watching with some other interesting lectures on financial accounting under the playlist of financial accounting in Archiversity YouTube channel. Alternatively, you can visit our website archiversity.com, and from there you can download the playlist in a PDF form. Just click the link over there and watch the video lectures on your mobile phone or your laptop or on your move. Anywhere, anytime you can watch my video lectures. Have a great time.